but I wanna die.
This bitch got me paying a rent, paying the bills, diamonds on my neck, diamonds on my wrist. Ooh, alright. Lately I've been watching and listening to a lot of new songs, alright, by Bruno Marzi, right? And this is a pretty nice song that I've been listening to, right? For my new viewers out there, welcome to the Stock Estate, alright? I'm like just being myself here on this channel, and we talk about swing trade stocks, alright, making money on this channel, as well as having good risk management, alright? For my old subscribers, I hope you had a wonderful week, and welcome back to the Stock Estate show, where we review last week's picks as well as go over this coming week's stocks. Without further ado, alright, let's jump into last week's stocks, which is EVH, SYF, and MEOH. First company, EVH, right? Last week, alright, we entered somewhere around here, alright, and the company since then has been going down a little bit more. For me, I bought a few at $28, $29, alright, and right now it's still sitting above our stop loss area, right below right here. Okay, so this is a company, again, we're going to play right now at these levels, right? If you buy in at these levels, the risk to reward actually will be a little bit better than previously. Okay, so this company, I'm still holding for this coming week, and that is EVH for last week. SYF, right, doing a little bit better, right? SYF, we bought in around here when market opened, $48. Right now, it's sitting around $50.30. I have personally even sold some options against this position, all right? Sold some puts. So I'm generally generating quite a few hundred, $200, $300 on weeklies on SYF, as well as some longer dated selling options on this company. Okay, so SYF doing pretty well for us. MEOH, right, a methane company, right, a chemical specialty company, and this company is right now going on a downtrend. All right, we bought in somewhere around here, around $46. All right, my weekly options has been getting a little bit down for the week, but we recovered quite a few due to time decay as well towards the end of the week. So this company, when I bought in around this level, all right, also I'm still holding, alright, for next week, okay, hoping for a rally to the further upside. Otherwise, we have our stop loss right here, around $44 to protect our downside. Alright, and that's MEOH for last week's picks. Alright, this coming week, alright, market is somewhat at an all-time high right now, all right? And again, I want to tell everyone to be a little bit more cautious when you analyze your companies, your trades, because if you are not careful, you can easily destroy a few accounts. So again, I would want you to take a look at the overall market condition, all right? The S&P 500s, the small caps, the mid caps, all right? And have a better sense of where the market is headed, all right, before taking a next position. But again, all-time highs market right now, but recently we did have a decent pullback in the S&P 500. So again, I'm going long next week for this coming week, all right, as per normal. All right, this first stock we're going to talk about for this coming week is actually Rider System. Rider System is a company, all right, that's in the finance industry. And finance industry, I researched on this entire outlook itself. All right, finance, the trend seems to be going really strong after the pullback. And again, the selling pressure seems to be there, but it sold off to a reasonable level at a support area. And I think that, they have certain more room to run for the finance industry. And Rider System is one of the companies with a very strong momentum and relative strength to, take advantage of this trend. So this company right now, as you can see, right, the daily time frame, it is sitting around near the 20 moving average, which is characterized by this yellow line over here. Every time it hits, right, you might penetrate through the 20 moving average, hit the 50, and it will just reverse up, down, up, down, up. Okay, very strongly correlated with this 20 moving average over here. And right now, okay, after being sold off again here, there seems to be some bullish sentiment coming back into this company. So again, I want to play this as a momentum play, all right, and buy this around here and selling it to the further upside, all right. So let me draw it out for you guys, all right. It should look something like this, all right. Stop loss, okay, the trailing stop loss will be somewhere below here, all right? The trailing stop will be around $3.37. And the upside is, I would say, unlimited upside, because what you want to do is you want to set a trailing stop loss, okay? So for those of you who do not know what a trailing stop loss is, go and Google it. All right, basically, it's just a stop loss that adjusts with the market price. So if the market price goes up, the stop loss number will go up as well. So for this kind of trend following plays, you just want to buy high and sell even higher as much as you can, as long as the trend allows it for. So as long as this trend based on the 20 moving average is going to go higher and higher and higher, all right? Just draw it out for you guys, all right? As long as it goes higher and higher and higher, all right? This over here, it goes higher and bounces and go higher and higher and higher, right? Your stop loss will always be a little bit below $3 below the moving average. But one day, if it just drops to the further downside, you get stopped out of the trade itself, right? And that is pretty straightforward, okay, I would say. And that is for R, right? The system is the first company that we're going to play for this coming week. Next company we'll talk about, NTNX, Nuantix, right? Nuantix is a company that posted spectacular earnings, and that's why this massive ran up here over to the further upside. Hit a certain top, overall market conditions dragged it back down to the $34 again, all right? Even though running up to $44, $43 at one point. And due to its strong earnings call, I do think that there is a floor around $35, checking out its fundamentals. The floor is around $35, $34, right? This company will be actually pretty interesting to sell options on if you wish to take advantage of some theta strategies to apply on this company. But as a swing trader, all right, definitely this is a company that we want to play somewhere here, bam, bam, all right, here, da-da-da. Okay, you can see, okay, just by this, right, this is roughly our stop loss area. You can see that market manipulators often like to play this, right, and just stop people out, reverse back in the favor. So again, your stop loss, you want to be a bit more generous, right? Okay, so if you bring it over here, right? Okay, definitely not want to set it, okay, just right below, the stop loss over here, because more often than not, market makers can, set a huge sell order, stop you out, and buy back the shares, all right? So you want to give a little bit of breathing room, right? Not too heavy, all right? In this case, all right, this entire area itself, you want to get a good risk to reward, you want to sell it somewhere around here, right below the stop loss, around here, right, around here, da-da-da. Okay, and from here, right, that's around 9% stop loss. So again, if you are risking, right, example, $3 per share, right, okay, your entire amount of shares, how many shares you buy will be determined by how many, what is your account size, right, your capital account size. So again, for example, right, let's draw it out. Let's draw my text here. Okay, so for example, if your account is $10,000, right, $10,000, yes, all right, and you are risking $3 per trade. $3 per trade. Right, okay, so you are risking $3 per trade in a $10,000 account. Okay, and how much is $3 in a $10,000 account? Okay, and that is, after you do out the math, right, and everything else, that works out to be 0.03% of a entire account, right? Because $3 of a $100 account is what, 3%. So basically, right, if you only want to risk 1% of your account, okay, so 1% of a $10,000 account is equals to how much? Quick math, all right, it's $100, right, it's $100. So basically, okay, you can only, 100 you divide by 3, right, and it equals to 33.3. Okay, so you round up to the nearest number, right? You round up again, it's around 34 shares. So again, basically, you only want to buy a maximum of 34 shares of this company, all right, to risk only 1% of your account. All right, that's how we work out the math for this. Okay, this is how you want to scale your position size accordingly. Okay, it's not about how many shares you want to trade at any given point in time. It's more about how much money are you risking, right, and every single trade. So again, if you are calculating, right, this is 1% of account, 1% of account is $100. So max on every trade, you only will lose around $100. All right, so in this case, you only buy 34 shares, all right, and if you lose, all right, you lose or you get stopped out of this trade, that is a $100 loss. And $100 loss is very easy to gain back, 1% loss. But however, all right, if you lose more than 1%, right, as you go down the figures, if you lose 10% of your account, all right, to earn back that 10%, right, you have to get a further capital gains on that account because your capital is now smaller, right? If you don't understand what I'm saying, all right, I'll illustrate it next time again in another video because I don't want to drag out this video too much. But basically, that's the math behind this. So you want to definitely only risk only 1% maximum of this account itself, and that is around 34 shares itself on this company. So same goes for any other company as well, right? And the potential upside, right, of 34 shares, right? So look in this case, right, it's 24%, it's around $8.46, right? So again, 34 times, how much was that? $8.60, right? Okay, so $8.40, let's put 8.4, all right? And how much is that? All right, quick math, all right? This is some, mental exercise, a quick mental exercise in the middle of nowhere, right, to test you, okay? I don't want you to just passively watch, I want you to learn something as well. And that is a $285 after a very rough rounding up and down. It's around $285. So again, you will stand to lose $100 and you will stand to gain $285 if this trade works out to, where you want to get your profits on. And again, remember my 7% rule, right? Let me just draw down again. This is the 7% rule. 7% rule, all right? 7% rule, what does 7% rule means, right? The 7% rule means that, once you hit a certain level, all right, a price level, that's where you want to take some profits, all right? So what I mean, all right, you can see this line over here, this beautiful line, okay, a little bit jiggly, a little bit crooked. This represents a 10%, 24% upside, right? But again, once it hits around the mid levels, right, maybe around $38, you want to take your first level of profits around the halfway point, all right, 7% or more. You want to take some profits because just in case it rallies up, right, all right, and it hits your profit target. Okay, for example, it rallies up, hits this level, and it just reverses back down again, all right? You could have taken some profits around here because it might go up and down and stay in a range for a very, very long time. It might not hit the full sum. So again, you might want to take some profits around the 7% level. And definitely this will affect, all right, how much you're actually, making per trade around here. You can see 7% rule, right? This $285 might be lesser, but again, this is all risk management, all right? Very important risk management. Okay, if you want to stay in this swing trading career for long, you gotta have to work out the numbers, right? After all, you're up against a lot of massive players who are in this game for a very, very long time. And the only way you're able to safeguard your account, all right, from blowing up is really to manage your risk really, really well. Because if you don't manage your risk, all right, you're just playing to fail, right? If you just backhold a lot of companies, right, 50% losses, 60% losses, then that's how you blow an account, all right? And if you want to do swing trading for a longer period of time, you have to treat this as a business, all right? And the capital that you put into this business, right, is capital that you're willing to, spend, all right, to make more money, all right? Like any other business out there, I run a startup before in my past before. It's similar to that as well. Starting up a business and everything. You have to, example, you want to do marketing for your products, right? You have to spend maybe $50, $100, $200, right, to market your products, and in hopes that you might gain some customers who might buy your products, and make maybe $1,000 on that. And there's a 5-to-1 risk to reward ratio. Okay, if you think of everything else in terms of risk to reward ratio, it's kind of interesting as well. Just a little life concept for all of you guys out there. If you are curious about my mindset about investing, and I think it applies to a lot of things in our lives as well, not just trading and investing. Right? For example, you want to get education, right? Education. 4 years of your life, right? 4 years of your life, right? Paying maybe $46,000 up to $100,000 for your university degree, and that translates to maybe, okay, you have a higher paying job for the next 10 or so years, or maybe $10,000 job, $20,000 job, and you work out to that's the reward, right? Versus the risk of you, getting a degree for $100,000 and, not getting a job at all and being, a useless person and, just sitting at home doing nothing, right? And you're not doing anything at all. And that's the loss you're going to be making. So again, everything is in terms of risk to reward. So again, when you lose maybe $100 due to the stop loss, don't take it personally against you. It's just that, that is a risk that you're willing to take. And in that case, that particular trade itself, all right, you lost, all right? And yeah, that is actually, a very risk managed approach, which is much less risky than a lot of people think, right? A lot of people think that this is an extremely risky thing, but, honestly, we take way more risk, right, in other aspects of our lives, just that we are not really looking at it in the point of risk, all right? So, for example, you want to get a house, a lot of risk as well. Taking on a mortgage, a lot of risk as well, but just that we are managing our risk, especially. So, risk management, very important in trading, as well as a lot of aspects in your life. You gotta, take into consideration these kind of factors. All right, I've talked a lot about NTNX, but basically this is the trade itself for this coming week, and I shall jump onto the third stock itself. All right, let's go. Okay, third company, Cleveland's, very basic materials. My favorite, one of my favorites, right? Massive runs, right? This one has been generating a lot of profits for me, all right? Here was a good around 400, around 600, around here. Took some losses as well when they spiked too massively below to the downside, like this area. Took some losses as well. Okay, I do take losses once in a while as well. So you gotta not take it personally against you. But this kind of setups are the best, right? So, and right now it has put down all the way to $22, right near the mass of support zones. A lot of buyers and sellers around this range, and that's where I think I'll be making my move. But very importantly, now it's on a downtrend. Wait for a confirmation. What's a confirmation? Confirmation is something like this. All right, let me just draw this. All right, see, can you see this? This massive thing over here. Yes, this over here. This is a confirmation. All right, when it bounces up a big green candle. I love to see a lot of buying pressure coming back in. Right now, I see there's no lot of buyers here. Everybody's selling. If you buy around here, what happened? You could just go further down to the next support level. So what you want to do is you want to wait for this to, come potentially back up again. So let me just delete this. All right. All right. You want to definitely look at this in this way. Okay. You want to get it here down and wait for a certain candle to form something like a huge green candle over here to form up, and you want to buy somewhere around this range, right, to swing to the further upside. So confirmation is very, very important in this sense, all right, and this trade itself will look something like this, all right. I'll probably put a buy stop order at the top, so you got to hit that certain price level before going up. So I'm probably going to sell it somewhere around, okay, my first profit taking area will be around here, 16%, 15%, a short trade itself, and the stop loss will be right below here, 6%. So around 2-to-1 risk to reward ratio trade itself. Good enough for me. CLF, I would say, is a pretty strong company as well, but however, it's been affected a lot by the commodity sector, right? It's a little bit more volatile, okay, because prices now are soaring, supply side, demand side, there's a lot of conflicting factors coming around in the area. So this is a very risky one, a very volatile one, so manage your risk properly. So a 2-to-1 risk to reward ratio is a pretty decent one for this coming week. So this is the basic material sector, CLF, Cleveland Cliffs. All right. That's it for today's video, everyone. I hope you guys enjoyed. I'm going to post this as soon as possible, right? And I hope you have a wonderful time, all right, listening to me and some of these life advice here as like a podcast kind of mode. Yeah, you know, I appreciate all of you watching, you know, and listening to it, okay? You can listen to this, you know, on the bus, on anything, all right? But be sure to keep up to date with this every single week. Spend maybe just 10 or 15 minutes on the weekends, all right? Dedicate this time, you know, to watch these videos, right? Because you'll be more accountable, right, to yourself, right? And I'll be here, you know, just to keep things in shape so that you will not, you know, slowly kind of lose touch with your swing trading and just kind of give up on it, right? Because this is a process, right? All right, that you have to hone yourself. It's just like doing homework, hone yourself, and you get better and better and better. And one day, you know, it becomes very effortless, right? To, you know, scan through, you know, and it becomes a repeatable process that you are able to do again and again and again and again as you become better and better. And with that said, I hope you guys have a wonderful day ahead, all right? And I shall see you again in the next video. Stock Stayed Out.